let's start now. So, let me share my screen. Me that play now, that does not mean you should vex me. I will swear for you. Not because I play now. Àti mentor, with the student, all of us, we are not, all of us are mad. With the mentor, with the students. So it's mad person that can handle mad person. Everybody is not okay. Everybody, including me, you, all of us, we are not okay. So how would somebody that is, if I am okay, how will I handle you people that is not okay? So I have to be like you to be able to handle you. You understand? So let's get down to, can you guys see my screen, guys? Can you guys see my screen? Hello, please, can you see my screen? Okay, thank you. So this is the simple perspective of session, right? So this is Asia session, and this is London. Now, this is a textbook setup, right? But now let's now go to the advanced part of it. What is expected of you once your session open like this? This is the line. This is where you should pay attention. The thing you want to notice, number one, as soon as the market opens, where did the price go first? Now, I'm coming. Let's say market is like this. Okay, let's use this one as an example. This one I'm using here. So as soon as your session opens, you want to take note of, we are still referencing based on these two things. So okay, let me come back here. So let's say this is when the market opens. Where did the market go first? Is it up or is it down? If the market go up first, as soon as it opens, it has a high tendency that this session wants to sell. If this market go down first, it has a high tendency that this market wants to buy. So the question is, why do they go down first? And why did this one go up first? They went up, as we all know, just to create liquidity. Number one, to create liquidity. No, wait. Number one is to what? Number one, they go up to go and induce. So they go out to go and induce if there is an existing inducement to grab. Which means, as soon as the market opens, let's say there's a liquidity here. A market now open here. So this market can start as a buy to come and grab the liquidity to induce before it sells. So which means, if you spot the liquidity here and the market opens, let's say it opens around here and it starts to buy, all you just came to do, and you have spot an inducement, or you just have to wait for that inducement to get grabbed and trade opposite it once you see an intent. That is the first scenario. The second scenario is, if the session opens, if it does not have an existing inducement, it creates a new one like this. So if it creates a new one, you can see it bought, it sell. Just for some people to feel like, okay, it has bought before night one. Some people that does not really understand this concept well, that this one came to induce. It did not just buy. So the inducement is just like a fake out to take out liquidities here, to trigger buy stop traders here, and to take out everybody that are buying these guys. So that is why it came to hunt. So some people here now, no inducement around here. Everything here, no inducement there. So this market just start buying. So what it's going to do is it's going to give you a fake break of structure. And that break of structure would not have a sign of any manipulation. Probably this sign or the two type of manipulation that I told you guys, which is the one that aggressively take liquidity, then sluggishly come down, which this guy will be your order block. Or the one that sluggishly take liquidity and aggressively print back down, which this guy will be your order block. It does not have that characteristics. Yeah. So which means this is an inducement, like I did right here. So the market will come, take that liquidity. But because this market buy first, it shows that this market is cooking to sell. So which means you wait for your confirmation, then you sell off. But if you can spot a valid POI right here, you can pick your first entry right here and your conservative entry right here. Guys, am I making sense? So another scenario is, let's now talk about the continuation pattern of it. Let's say the market has been selling like this. This is where the market stopped and the new session opens. Now, if we ask ourselves, where is the money? The money was here as at this point in time. But did this market sell? It sell a bit and it buy. So that means this order flow is what? Is starting to be bullish. Because this push, if this is a true inducement, it is supposed to come like this. So for you to start creating a bullish order flow, once a new session starts, it now started as a sell. Don't try to jump in on that sell. All the market is coming to do is to take out this SNR liquidity, give you a new break of structure, and you will buy it to target this high. Even though you know that this is a protected high, you don't care because this is the liquidity. And the liquidity is far from the POI. So which means you are not just going to predict this move. You are going to rather trade the present inducement that happens in that session. For every session, you always have either existing inducement or immediate inducement. Existing is the one that was created by previous session or previous day's high or previous day's low or previous whatever. Immediate is the one that is created inside that session. Wọ́n lọ mọ òyìnbó tó ń sọ, èmi ò mọ òyìnbó, mi ò mọ power of three, Power Rangers ni. Existing inducement and what? Immediate inducement. So the immediate one is the one that the inducement happens inside that session, which is what? Inducement like POI inducement. So now let's go to the chart so that I can explain this thing properly. Gege, hasta la vie, give them. Now, look at this. We have Asian session right here. Asian high, Asian low. What do you notice? When Frankfurt opens around here, what did the Frankfurt did? Frankfurt is 1 hour after Asian session. right? So look at what the Frankfurt did. It was selling aggressively, leaving Asian session behind. So the question I say you are going to ask yourself is, where is the money? As a trader, you know that the money is sitting at either this Asian high or this previous session high. Why? This Asian session is not protected. This previous session high is not protected. Right? So what is expected of me to do? I have my liquidity in previous session high, previous session low. Right? So now, what did the market do? This is my London session right here. So looking at this order flow, let's count it together. I have a low, a high, a low, a high, a low, a high, inducement, a low. Did this one create a high? No. But what do you notice? Break of structure before pulling back, which makes this guy what? An inducement. And it is not an inducement alone. It is Asia plus external liquidity or plus incomplete pullback. Because break of structure before pulling back is an incomplete pullback. So which means, as soon as this market comes, I ask myself, where is the money? The money is here. The money is here. The money is here. So at this point in time that London session opens, which of the money did they grab? They grabbed this money sitting inside this POI. So I am going to buy this move, because this is the money I could find and it aligns with my structure. I got my question right. Where is the money? So now, as soon as I get my money, I pick my buy, boom, I target the next money. But knowing the fact that Frankfurt session sold, which is as a result of an inducement, it shows that once this guy buy, it will clear the Asian session and clear all this inducement and also clear this previous session high. So after that, what do you see? The market clear all of them, then it changed character immediately. So after the change of character, it's mitigated right here, and I will have gotten my sell around here to target wherever I want to target. Now, after that, what happened next? New York session opens. Let me clear this drawing. New York session opens. Where is the money again? We could see that the money, when the New York session opened, what did the New York session did? It opens around this guy. But looking at this chart, after this manipulation, we manipulated, then we what? Broke structures. So seeing all these structures, now I'll be explaining something powerful for you guys here. And I bet, and I want you guys to listen. This guy takes out the liquidity and it breaks structure. So which means you might say it is a protected eye. But number one, characteristics of a protected eye is a peak formation. This guy has an equal eye. This one did not take out this eye before dropping, because that is where I pick myself from here. So it is a mitigation. That is number one. It is a mitigation. Number two, you could see the equal eyes. I want you to pay attention. That is not even where I'm coming to. You could see the equal eyes. Even though it took out liquidity. But what I want you to know is this. I swear. Let me show you something. When it took out this inducement, where this thing tap into, that I picked this sell from here, does it make any sense here? Does anything make any sense here, guys? Can you answer that question? Does anything make sense from where this price comes from after this inducement? No. But why did we take the trade? It is because the inducement leads to break of structure, and that is why I picked the trade. So, which means everything here does not make sense. So let's now investigate this price and let me show you what makes sense. Now, looking at this price here, this guy is a breaker block. And we got a reaction from here and it failed. Now let's analyze the price action. Analyzing this price action, you will see that we have a break of structure right here. And the market pullback. Incomplete pullback, leaving this fair value gap right here. Am I right? Am I right, guys? After then, what do you notice? Everything is mitigating itself. Everything is mitigating. Everything is mitigating. Everything is mitigating. So which means everything here, this guy is already mitigated. This is the, in all this range from year to year, this is the only incomplete price action. So which means I know that what? This price action here is fake. So which means as a trader, what am I expected to do? I'm expected to do something very, very simple, which is we have picked trade from this guy.